I think the most surprising, learning for us as a team, and I think it wasn't just me, but the rest of our team all felt this as well, was how different the textbook version of investing in a startup is as compared to how you really invest in a startup. When you go out there, you've got all these different internet resources you can look at with all different types of term sheets. And the reality is that when you're actually put in front of someone who, in our case, someone who had done it before, they had raised money, they'd exited a business, he knew what he was doing. And so when we were put in front of him to negotiate, here we are, 5 business school students with the kind of textbook approach. And he just, took our textbook approach, threw it out the window and said, no, this is what's important, this is what you need to think about. So getting the kind of, the real life, hands-on approach to venture capital investing was the biggest surprise for us.
Venture capital, I think, at its heart is a people business. It's who you know, it's your networks, it's connecting the entrepreneurs with companies that could potentially buy them or people that could help them. And I definitely think that the network element of it and the interpersonal element of it is much more important than the numbers. And I think every venture capital fund that we've spoken to since the competition and before the competition emphasize that at the end of the day, the valuation is just a number, just a price. Whereas having that connection with the entrepreneur and the investment in the person is really the core of the business, and how they make most of their money in the end isn't haggling over, percentage here, percentage there, but rather ensuring that the person can do their best.
The way that the power structure sits in an investor-entrepreneur negotiation obviously depends a bit on who the investor is and who the entrepreneur is. And I think we learnt this not only through our experience in the competition, but definitely talking to the investors post-competition when they gave us some feedback. They were very clear that if it's a first-time entrepreneur and they haven't really proven anything before, and maybe they've never even spoken to the investor before, at that very early stage, it's the investor with the power. They are the ones who can kind of push and prod the entrepreneur in the way that they see fit. However, once the entrepreneur is starting to raise money and get some traction with the investor community, and lo and behold, if they're all of a sudden a hot commodity or hot team to invest in, at that point in time, the power shifts quite radically. I think that at that point in time, it becomes a sales process for the investor, and they need to prove, well, why should you choose us as an investment partner? Why should we go into business with you? And that's when it becomes, a more equal playing ground. I think at the end of the day, if you're putting hard dollars on the line for a business that needs them to succeed, then there's always going to be a need for that from the entrepreneur. But it becomes a much more level playing field, I think.
My advice for VCIC competitions in the future would be to make sure that your term sheet focus is really on fostering a relationship with the entrepreneur and not getting caught up in public company valuation techniques, maybe the techniques that you learned in corporate finance, and really thinking with the hat on of a venture capital fund and how they would look at this investment and how they would think this investment could grow, and the terms that would really foster a partnership.
If someone asked me next year about the competition, the first thing I'd say is you have to do it. I think it was a fantastic opportunity to get hands-on experience as to how venture capital investing really works. Not the textbook version, not the MBA version, but the real life, how do you deal with people who are starting a business they're passionate about. In terms of advice and what I would then say to a student next year thinking about entering the competition, remember that it's a human interaction. You're not actually investing in an amazing idea or a whiz-bang piece of technology. You're investing in the capabilities of a team or of an individual. That is the core piece of value that sits in a small early stage business. And so when you're going through the process, always have that in mind. Think about, why should I partner with this person? Why would this person want to partner with me? What can I do to help this particular individual and give them comfort that we're the right investment partner for us?